Hello and welcome to the Mutual Fund Guide. It's all about your funds and your returns. I am Muralidhar Swaminathan. Joining me on the show today are Mr. D.P. Singh, Executive Director and Chief Marketing Officer at SBI Mutual Fund, Manish Mehta, Head Sales and Marketing at Kotak Mahindra AMC, and Abhinav Angirish, Founder, Invest Online. Gentlemen, welcome to the show. Thank you so much for joining us. The big issue today that we are looking at is the sharp fall in net inflows into equity funds for the month of December. 2019 has started off on a slightly somber note. We had a very good record of SIPs growing. SIPs continue to do well, but there is a lot of volatility. There are a number of issues. So, today's question is, are investors finding it difficult going in the mutual fund industry? Are they taking a pause, or are they worried that their returns are not up to expectations, or is this just a blip and an aberration? Before I get our guests to answer all those questions, let me go to my colleague Vandita Shivli. She has got some numbers. She will take you through all the numbers that came out yesterday. Vandita, over to you.
Well, globally, if we see, capital markets have been volatile. Volatility will continue due to oil prices, trade conflicts and US Fed rate hikes. Now, if we look at the AMFI data which came yesterday, if we see the MF AUMs, they fell in December 4.9% to 23 lakh crore rupees. Retail AUMs also stood at 10.23 lakh crore for December. Now let's look at equity fund inflows. So if we look at the equity fund inflows here, we can see a clear drop in the month of December. So this drop was 24% and it dropped to 5,765 crore rupees in December. Now the positive here is the equity ETFs which improved. It stood at 1,73,063 crore rupees in December versus 94,863 crore rupees in the month of November. So that's around 1% change on month basis, and it's a positive change. SIP inflows in December were positive as well. They stood at 8,022 crore rupees versus 7,985 crore rupees in the month of November. The change was marginal though, it was 0.5%. But if we look at the SIP inflows trend, so for our viewers here, we have captured the SIP collection like on month basis from January 2018 to December 2018. So if we really look at it from January to March, of course, we saw an improvement. Then in April, it just got declined a little bit. If we move on from April, can we move on? All right. So I have the numbers with me. So especially from April onwards, if we see, there we are. The SIP trends have been improving, and we can see in the month of May, it stood at 7,304 crore rupees, and how it has moved from May to August, it has really improved. And if we see in the month of December, there we are. It is standing at 8,022 crore rupees, which is really a very good trend. It is clearly reflecting how retail investors are behaving. So that's very good positive coming in here for our viewers with regards to the SIP inflows. Now, according to AMFI CEO here, December 2018 MF flows were at par if we compare it on a year-on-year basis. Also, the retail funds have been strong despite the weakness we have seen in capital markets. SIP folios have increased to 2 lakh by nearly 2 lakh here in the month of December. Also, the gross equity inflows went up in the month of December. Net inflows in the ETF category, as we already mentioned, it stood at 11,000 crore rupees, which is again very positive, and it clearly shows how the retail investors are behaving. It could be a market opportunity to book profits as well if you see a decline or an uptrend here. Customer base of mutual funds have also grown at a very healthy rate. Investors have definitely turned cautious due to political uncertainty and elections. But we have sufficient number of advertisement campaigns which are raising the awareness among the investors. Slowdown was the declines that we saw in the equity funds inflow. That could be because of the holiday season here. And most of it picks up in the month, in the next quarter, which is like from January to March quarter. Focus might be on ELSS funds. That could be the next trend that you could look for, according to various financial advisors. Well, December is a subdued month because it's a holiday season. So we never know. That could be the reason that we saw that the inflows went down here. But overall, if we see, it has been really positive with regards to the SIP inflows and the trends which we have been mentioning. SIP inflows stood at 8,022 crore rupees in the month of December.
Right. Interesting numbers, lots of numbers I should say. Thanks Vandita for joining us. Let me also bring in a broader perspective. We spoke to Mr. N.S. Venkatesh, CEO of Amphi, on why inflows have reduced in equity funds and what is the outlook going ahead. Let us listen into this conversation we had with him.
The equity inflows have come down, I agree, but mainly because I would say the markets are very volatile, because of which the people must be taking a little bit of a cautious approach. But if you look at the SIP inflows, the SIP inflows are have crossed 8,000 crore. They are at around 8,022 crore, and compared to December, it was 7,900 and odd crores. So there is a marginal uptick in December. The debt fund, I think you will see the wholesale investors start coming in. The reason behind that is we are in a neutral moving towards a neutral stance as far as monetary policy is concerned. So that will give a little bit of a advantage if you start investing in debt, because the yields which were at around over 8% had come all the way down to 7.25. Now it is at around 7.40, 45 levels, and it is expected to retrace to somewhere around 7%. So people will now start taking advantage by investing into the debt funds. Even the long term and the medium term debt funds, definitely, because the whosoever does the duration play at this particular point of time will start earning the benefits of that.
Right. I think the numbers are not looking good, but the tone is still positive. The question here is, today we want to look at not so much about which funds to invest or where to invest. We want to look at the underlying trend in the market. There has been a surge in large number of investors have come into the mutual fund industry over the last 3 to 4 years, especially post demonetization. So today we are not talking to the fund managers, we are talking to people who go out there, sell the funds, meet investors, understand the investors' requirements, and who better than those who actually are in the marketing and sales line. We have Mr. Singh, who is a veteran here. Mr. Singh, is this an aberration, is this a blip, or is this something that we need to worry about?
No, I don't think we need to worry about this, but at the same time it is not aberration as well, because the way the business is done has been disrupted by so many things, because of regulatory interventions, because of Supreme Court ruling of doing the KYCs, because the capacity of distributors went very high in getting more and more number of investors by doing Aadhaar based KYCs. With the change in the ground realities, the capacity has come down. When you say that the SIP numbers have come down, the basic reason is that. And second reason is because of the regulatory intervention, where the upfront brokerages have been banned. Now, you know, this business is done, it's a B2B, and it's being done with the intermediation of the distributors. When there's no immediate incentive for selling the fund, when there's a zero incentive, especially banks were a major contributor in fund inflows. When there's no immediate incentive, the whole business model will go into a reboot mode. Everybody has to rewrite the business strategy. So there, and over and above that, the political uncertainties and elections, and so many reasons contributed, and that is perhaps the reason. Right. I don't think the underlying is still bullish. People have good faith, and the Amphi this advertisement campaign and mutual funds are still seen as sahi hai.
Right, mutual funds are sahi hai, but within mutual funds, kya sahi hai, kya sahi nahi hai is something which many people are asking. I'm sure on the ground. At one level, we saw a surge in balance funds doing very well. Now we are seeing that balance funds have gone out of favor completely. Are there changes in tastes and preferences considering the fact that interest rates have also gone up? What has been your experience, Manish?
Yeah. So I think as far as balance fund was concerned, historically, if you see initially when there was a lot of interest that came in balance fund as a category, I think predominantly people were trying to sell it as a product where there was some consistency as far as dividends were concerned. A lot of takers of balance fund probably were either retirees or people who wanted some form of regular income. And while there was consistency of dividend payouts of the past, and because markets were also doing well, there was some component of capital gain appreciation also which they had witnessed. What has probably gone not in favor of balance fund going forward, one obviously has been the introduction of the dividend distribution tax, which obviously then sort of on the balance fund category makes it not that much more lucrative. And the fact of the matter is that in the volatility of the market, at least in this last 1 year, a lot of investors have seen portfolios erosion on balance fund almost in line with what diversified equity funds have seen. Plus, at the same time, they've also seen that there could be scenarios in which there have been skippages of dividends.
Right.
So that whole the cash flow analysis that they probably were dependent upon is probably not holding on true to what the original expectations of the investors was. And I think because of that also you probably have seen a lot of investors who either decided to sort of move out of that category. But I think a dividend distribution tax has also been a very big dampener, and I think the other thing is the erraticity of cash flows.
Right, very important. Cash flows matter. It's all very nice to say that stay invested for the long term. You can stay for 10 years, 20 years. That's a very common approach. Many many advisors would say, but then my long term is different from your long term. It could be 3 years for somebody, it could be 5 years for somebody, but at the end of the day, return matters. If the return is very low, investors get disappointed. Abhinav, let me come to you. There was this stage, we have come to a stage where mutual funds were seen as an alternative to fixed deposits. Many people would come and say that fixed deposits are giving me 5-6% or even less than 5% if we account for inflation. To what extent has that affected the industry or promoted the industry? And now that interest rate cycle has changed, is that view also changing? Are investors going back to FDs?
I would not say they're really going back to FDs.
But they'll definitely be comparing.
They do compare now because the interest rates have moved up. Unfortunately, debt funds have not performed too in the last 1 year for various reasons on the bond markets and so on. Besides also touching on the previous point, I think there was a lot of mis-selling which also happened in the market.
Right.
Let's face that fact. FDs were being replaced by balance funds the last 2.5 years. People were missold by saying these dividends will continue probably for the rest of your life, if not for the next 3 years at least. Your dividend yields were as high as 8 to 10% in the last 2 years. Suddenly everything has dried up. So it does create some kind of negativity in the market. So yes, these are the times when you're seeing no returns from equities or in debt, or for that matter even negative on certain debt funds if there are durations and so on. So people will tend to look at parking their money somewhere at least, if not there, if not in debt per se. So yes, FD is the first option people do start looking at. But if you even go back and think now, even at a deposit of 8.5% per se, after paying taxes, you're still not making more than 5.5%.
Right.
So the smart investor still knows that yes, probably he is taking a pause. He's keeping cash back, but eventually he will come back to the market.
Right. So on the dividend part, let me take this question back to Mr. Singh. Have you witnessed people moving out of dividend options and shifting to systematic withdrawal plan? Is that also contributing to this temporary, I would call it readjustment, if I may say so? What is your view on that?
No, we have not seen a big trend, but definitely I think most of the fund houses are talking about it, and this is the best thing for the investors from number one from cash flow point of view, and number two from tax efficiency point of view. So that has to happen, that we need to tell people, and especially when we are talking about the solutions based approach by all the fund houses, it is very necessary that debt funds and equity funds are talked together. It's not, see, if somebody is moving from bank deposits to mutual fund, as Abhinav rightly said, when the right journey was not from FD to balance fund, rather it was from FD to either a money market fund or FMP. So the industry has not been able to sell that in a big way. Obviously, there are so many reasons for that. The topmost among that is the margins for distributors and this thing. But we need to do that. The higher volumes at a lower price will make up for this thing. And today, when we have seen that as a percentage to deposits, mutual funds have moved from 10% to 23, 24%. So then we need to do much more volumes in high revenue kind of products also, so as to keep it consistent.
Absolutely.
So that's the duty.
In fact, let me remind our viewers that the data that I have in front of me, SIP contribution in financial year 2016 to 17 was about 44,000 crores. It grew to 67,000 crores in the last financial year, and in the current financial year so far we have already done 60,500 crores. In spite of this, the kind of volatility, Manish, we are seeing, are you worried that there could be a flight to safety kind of rethinking among investors at this stage?
No, I think, the reality definitely, even if you look at the monthly SIP numbers, I mean, the number has only kept growing. So that shows that, yes, there are a lot of new investors or maybe repeat investors who have been coming back and parking money through the SIP route, because there is enough education available and awareness created in terms of that, approach the market in a disciplined way, and there is data to prove that over long periods of time an investment through an SIP has ended up generating pretty good, encouraging returns to the investor. I think the trend that we have obviously witnessed over the last couple of months has been, I want to believe that there are obviously a lot of first time investors who have come and experimented with mutual funds for the first time because of the campaign, because of awareness going up, and maybe a lot of them could also be direct investors who probably not taken advice in terms of how they have to approach it, and have come ahead and taken the experience of investing in mutual funds. Now 1 year return, 2 year returns of if an SIP are negative, and a lot of them probably then have sort of lost that confidence of being invested over there. So I was seeing one data point for a particular month, and in terms of number of SIPs that were seized for that particular month, almost close to 8 to 10% of the SIP seized actually was direct as a category.
Right.
So I mean, while investing, they probably have, there is enough material available online. They've read through it, they've understood the concept, they probably heard it from friends and family and gone ahead and invest. But that discipline of riding it through the volatility, being invested when things are the worst, because that's when you sort of average out your SIP installments at lower prices. That is something that probably they either read it, are not able to understand, or they don't have the right kind of people to tell them this is the time when you need to double up in the market, or at least stay consistently invested, and that's when you'll see the benefits of returns over a long period of time. So I think as awareness levels amongst people continue to keep going up, I believe that those numbers will go, and the data shows that there have been definitely newer number of investors who are coming in and at least investing in SIPs.
Right. So the number of options in front of the mutual fund investor today is huge. It's multiplied several folds, and some kind of structuring and restructuring that is happening in the industry is something we need to keep watch. But they can create short term blips. They can create illusions. They can say that somebody shifts from, let's say, a large cap to a multi cap or a small cap or a mid cap, will find either a surge in returns or a fall in returns. But what is important for investors is to stay invested in good funds. There are many options that are available, which is why every day we come back to you, the mutual fund investors talk to you and help you move forward with your goals. But I need to take a short break, come back and take queries from investors from across the country. Stay tuned to BTVI. Welcome back. You're watching the Mutual Fund Guide, and we are discussing trends, but let's shift focus to specifics. What to invest, where to invest, how long to hold the investment, which category, these are the important questions. Let's go straight to Pramod, who is on the line from Bengaluru. Good afternoon, Pramod. What's your query?
Good afternoon, sir.
Yeah, please go ahead.
Sir, myself Pramod, I'm calling from Bangalore. I want to know how to create a lump sum amount of 1 crore in 10 years. I want to know it may be option to lump sum or SIP.
Okay.
So I need a best mutual funds.
Okay. You want to know the best mutual funds. 10 years, 1 crore is his target. Lump sum or SIP? If you have a follow-up question, you can ask it.
Through lump sum.
Through lump sum you want to do. Okay.
Okay, so I would recommend to put the amount lump sum. I feel the markets are fine. I don't want to time the markets at the moment. Ideally, I would say that you put 50% lump sum and park the balance via STPs. But if the horizon is 10 years, I think it's absolutely fine to put the money upfront. As long as he doesn't want to go back and check the returns on a monthly, yearly or 2-year basis, I would suggest you split the portfolio. You take a large cap, a mid cap and a small cap fund. Mid-small do get aggressive, but for the period he has, I think it's a great time to invest in all the 3 categories. To list schemes, I would say you can pick up an Axis Blue Chip for the large cap scheme. For the small cap, I'd recommend SBI's small cap fund. And in the mid cap, look at the L&T mid cap fund.
Right, very interesting. You know, of the 3, Pramod, we also have SBI's Chief Marketing Officer who is sitting here. He has recommended SBI small cap fund. The question, Mr. Singh, on small cap fund is it's quite challenging because though the universe is large, a lot of people tend to invest in small cap funds, but then stock selection becomes slightly difficult because there you want to control risk.
I want to clarify one thing, that we are not accepting lump sum money in SBI small cap fund.
Yeah.
We are getting only SIPs up to 25,000 rupees.
Correct.
That exactly replies your question. Yeah, because we know the universe is big, but the right kind of companies, if we get a lot of lump sum money, it becomes very, very difficult to deploy.
Right.
So if I will also suggest that when whatever lump sum you want to do, you can do in large cap, but small cap you can do SIP of 25,000 rupees and SB small
25,000 per month.
Per month.
Per month. So Pramod, the answer is very clear. If you want to choose SBI small cap, you can do up to 25,000 per month. But how many years does he have to do? What should be the allocation in that case?
So he's wanted to invest for 10-year period, right?
Right.
So the SIP can continue for as long as he likes.
Right.
And as far as the lump sum amount goes, he can also do an STP in the small cap fund as well. So
Right.
if he's doing 50% of lump sum amount,
Right.
50% could go into the STP.
Break it down and
Unless he wants to put the entire 5 lakhs upfront, which is what he wants to invest, then he can put it in the large cap and the mid cap fund.
Right.
And the SIP can continue in all the 3 funds equally.
right. Pramod, do you have a follow-up question or did you get the answers?
Yes, sir, yes, I got it.
Okay. Okay. All the best with your investments. Let's move to the next query. Kalpana from Chennai. This is a male. Her relative is getting married in February 2019, just a month away, and she is looking to gift a mutual fund for the same. She wants to know if it is possible and wants us to elaborate on the procedures for the same. This question I will toss to Manish. Is it possible to gift a mutual fund, and what would be the procedure?
No, the thing is, as far as mutual funds are concerned, I mean, you can, in fact,
People have moved from shopper stop watches,
Yes.
go and buy dresses and go and buy goodies. They moved to gifting mutual
no, I
funds.
think it's a
fantastic.
very noble idea and a
Yeah.
very noble thought. And I think for someone who's like sort of getting married now, and if the time horizon obviously is going to be extremely long, I think this gift probably will become much more valuable than any other kind of material gift that has been given to the person who's getting married next month. I think as far as what can be done is that they can probably look at depositing that much of money that they want to do in the account of the person in whose name they want to start a mutual fund investment, and then maybe have that person to make that investment, because
recommend to
probably to do that.
But in most cases, such money eventually gets used for shopping. So that's the reason you want to gift it to buy mutual fund
You
units.
want to
So-
add something to it?
No, as per the laws of the date, see, investing directly for third person is not allowed.
correct. No,
It's not possible because of the act. But if it's a real direct family member, for that, if somebody wants to put lump sum money for some and brother, sister, siblings name, then there is a facility called Bandhan SWP by SB Mutual Fund, where you can invest in lump sum and your sibling, your direct relation as per the Income Tax Act, those 4 relations, that is brother, sister, father, mother and your children, then you can do that, and that is the only specific relationship where this SWP thing can be done.
Right. So, Kalpana, the message is very clear. You can give to your relatives, not to your friend. I think to your friend you may have to gift in a different manner, maybe in the traditional vouchers that people generally give. So, it's very clear. One last question, Mr. Singh and Manish, the ease of liquidity is very important for people. In a fixed maturity plan, you get stuck. In a fixed deposit, I can break it and take it. Do you think that there should be a facility where even in equities, ICICI Bank, ICICI Direct is offering, instead of waiting for T+2, if you sell shares, you can get 50,000 upfront. Do you think some such facility innovation has to come in the mutual fund industry?
Yeah, it has to be actually popularized. Actually, banks are giving loans against FMPs up to 85%, all the banks are giving. But that has to be bundled, that has to be made available, because liquidity, yes, is a big issue. Though theoretically it's there that it's listed and you can sell in the market, but there's no buyer. There's no buyer, so the only way you can do it, you can raise a loan against it. And that has to be popularized, that has to be bundled. Generally, bundled products are not sold in the, again because of the regulation, we can't bundle it and sell it. But yes, banks are there and we need to popularize that. Now, banks are likely to offer this facility online also very soon. So, I think that problem will be over with that.
I'll just like to add that, in fact, I think like now most mutual funds have started to offer that Insta redemption facility where up to 50,000 rupees can be made available, but provided the investments are in a liquid fund, and up to 50,000 rupees one can redeem at any point of time. So that is, I think I would say that's at least the first step that has been taken in that direction.
I think we have to wait for a longer time to see a day when you can use your ATM card, redeem the money, take out cash and come and say, look, I have taken cash from my mutual fund.
So there was such an option by one of the fund houses?
There was,
yes.
Okay.
So Reliance had launched
that.
Where you could actually
use the
liquid
ATM card
fund, use the ATM card to withdraw a certain amount of money in one day.
Okay.
See, but I think more importantly, what investors need to understand is that if you're making an asset allocation, you made a solution for emergency fund, you made a contingency fund.
Right.
So then typically these problems should not arise unless it's a dire emergency per se.
Absolutely.
And that's exactly why advisors will come into play. And that's why you also mentioned that direct SIP stopped first.
Right.
So if there is someone to handhold you and explain to you that if you're investing for 10, 15, 20 years, why are you looking at the NAVs on a monthly and yearly basis? So the asset allocation is very essential in this process.
Yeah, I think lots of issues to discuss and chat, but many options for the mutual fund investors. My producer is asking me to wind up. We have run out of time. Gentlemen, thank you so much for taking our viewers through all the options and the way to invest in mutual funds. Save, invest and prosper. With that, it's a short break here. More news and updates coming up on the other side.